So, good afternoon again. As last time, I feel slightly inadequate introducing our next speaker, given his incredible contribution to the world of regulation and the markets and so forth that we all inhabit. As you know, Andrew is Chief Executive of the FCA. Bear in mind, he's also on the board of ESMA and on the board of IOSCO, so he has a really interesting international perspective on what we're trying to do. He's been a huge supporter of FMSB and indeed is one of the key reasons why I'm here today, because when I was first thinking about doing this, he was still at the PRA and we talked about it a lot at that time, and he was a big positive force in that discussion about whether I should take on this role. So thank you, Andrew, for giving me that nudge earlier on in your time. We're really looking forward to hearing what you've got to say, and we'll have a little Q&A afterwards. Thank you.
Thanks, Mark. Well, thank you very much, Mark. It's a really great pleasure to be here this afternoon. I'm also greatly pleased and relieved that you're still feeling so positive about the nudge I gave you, but actually the success of today I think amply demonstrates why it was absolutely the right thing to do. So well done. And can I start by congratulating the FMSB on the work that it's doing? There's absolutely no question that you took on a very much needed role, but one that, as I know you and I discussed at the time when there was that bit of nudging going on, history forcefully demonstrates is not at all easy, judging by past experience. And the FMSB was in a very important sense, of course, born out of the crisis. Although I actually prefer to say, and I say quite often, crises in the plural, if you don't mind, because over the last decade, we've experienced both a prudential and conduct of business crisis, so really two crises in my view. And much like the FCA and the PRA, of which Mark and I are board members these days, the FMSB was a response to what was very hard experience. So I want to use my short remarks today before we move to a discussion to cover quite a large landscape. So I'm going to try and do so in a short space of time. And in doing so, I want to put the role of industry standards and thus the FMSB into a fairly broad perspective and really try to sketch out how they fit with regulation, and that is what we do. Because there's no question that we have a common interest and we have common objectives, but we also need to be clear, obviously, where the boundaries work, how they operate. And so in seeking to sketch that out, I'm going to set out a few views on the role of standards looking forwards, because there's no doubt this is a very important role. So to do that, I want to start with two fairly big picture points. The first, in my view, is that the UK benefits as a financial centre because of the common law characteristics of the English legal system. I would also say that it's also another feature, of course, as to why, for instance, New York is a very big financial centre, because it also has that feature of a common law legal system. And it's often cited in the case of London that that's why it has become, one reason why it's become such an important international financial centre. And although I'm a non-lawyer, I should say, I do think there is merit in this argument. I think that's very clearly important points that you can trace through to underline this argument, because common law systems allow statutory objectives to be interpreted against a framework of pre-existing case or common law. And the application of statutory objectives, and that's what we do at the FCA, can then evolve to meet changing needs, but it can do so predictably because judgments are made against past precedent. And statutory objectives such as the market integrity objective that we have at the FCA can be interpreted as the facts and the evidence change, but against a backdrop of consistent overarching principles. And that, of course, is most helpful where the real world evolves very quickly. And, of course, wholesale markets, and I know you were just discussing this in a panel, are a very good, obviously, example, to state the obvious, of a world where things do evolve very quickly. So it's probably no surprise, in my view, that wholesale markets tend to thrive in a common law system. And such a context, naturally, it seems to me, lends itself to incorporating standards, industry standards that are grounded in clear principles that reflect the public interest, and of course in this case importantly market integrity, and that are able, because this is one of the great strengths of standards, if not the great strength, to evolve and develop and adapt relatively rapidly. So that's the first big picture point. The second big picture point is that the UK system of financial regulation is based around what we tend to call the regulatory perimeter, as defined by the Regulatory Activities Order, which flows from our legislation, Financial Services and Markets Act. It's sometimes assumed that if a firm falls within our regulation, we must be directly overseeing everything that it does. My answer to that is no and yes. It's not quite that straightforward, and I want to try to explain briefly why it's not quite that straightforward. The Activities Order, or the RAO as it's known, defines the activities that we regulate. In other words, it makes rules allows rules to be made in order to achieve our statutory objectives, and thus for us to supervise against those rules. And firms are given permission to carry on those activities. They're required at all times to meet our threshold conditions for authorisation, and their senior management must likewise be fit and proper to do so. So in broad terms, the legislation provides relatively comprehensive coverage of retail banking, whereas in wholesale, we have more of a hybrid between the regulated and the unregulated activities. Now, fairly obviously, that hybrid creates a space for industry standards. And for a long time in London markets, there have been industry standards. They were sometimes called codes. In passing, I should say that while I think it can perhaps be seen as a matter of semantics, I actually think it's an important signal that you've adopted the word standards, because I think it does convey an important meaning in the word itself. So having made those two big picture framing points about common law and the regulatory perimeter, let me come on to a little bit of recent history. As I said earlier, we've had a crisis of financial conduct. Of course, it's not limited to this country by any means. And it's also important to be clear that this crisis of conduct has not been limited to being inside or outside the regulatory perimeter. It's been on both sides. Payment protection insurance is clearly inside the perimeter. FX market misconduct has, for instance, been outside the perimeter. So there's no outright winner in terms of the better approach on the perimeter, drawing on past regulatory arrangements. I think we have to be quite humble about that, frankly. But what we have seen is a substantial, in the wake of that crisis, overhaul across the board, both inside and outside the perimeter. And it's out of that the FMSB has come to be born. Now, an important part of that overhaul, that total overhaul, if you like, has been the so-called senior managers and certification regime. That was put in place as a result of the Parliamentary Commission on Banking Standards. Now, this is important in this landscape because very helpfully, in my view, the new regime, the senior managers regime, puts the emphasis on individual responsibility of senior managers of firms. And the power of that arrangement lies in its simplicity, about taking responsibility seriously, being accountable for it. But interestingly, and this is where it becomes a little bit more complex, the senior managers regime does not stop at the regulatory perimeter. It's a whole firm concept. And that, in my view, is rightly so, because responsibility should not be limited as a principle and should guide conduct. Put it simply, you can't behave yourself inside the perimeter and let it all hang out outside the perimeter. I think that's not really a sustainable way of going about things. But obviously, by creating that whole firm regime in terms of responsibility, it does create an issue for us as the regulator about how we judge conduct outside the perimeter if we don't have rules setting detailed standards for that conduct. So you may now be able to guess where I'm heading on this. There is a role for well-constructed standards that we can endorse and use to put the SMR, the senior managers regime, into practice. Incidentally, that goes beyond, in my view, wholesale markets, as perhaps we would discuss them this afternoon, because it also includes other things that are outside the perimeter, like standards for corporate lending. Something that has been put into sharp focus by cases like RBS Global Restructuring Group. But there's another reason why putting more form around the connection between good standards and the senior managers regime makes sense. History I have to say, shows that there is a tendency in the past to create standards, often in response to a revealed problem in a market, but then to let those standards, metaphorically at least, gather dust and not be applied effectively until the next problem or crisis is revealed. This was the case with LIBOR and foreign exchange market problems in many ways. So the lesson of that experience is that well-intentioned and carefully constructed market-based initiatives can fall into some disrepair or be ignored over time. And that's not a criticism, that's a fact of the past, if you like. We could spend a lot of time assessing why that happens. That's, I think, for another day, if you don't mind. But it does mean that we have to think about how we can, in a sense, put those regimes to work and make them continuous for us in what is a statutory public interest regime. So how can we best combine a statutory public interest regime and a very good role for industry standards? And that's the background to the consultation paper that we issued recently, which proposes that we create a formal link between well-constructed standards of the sort are being put together by Mark and his colleagues, which would mean a formal approval from us, and to link those into the senior managers regime to allow us to put them to work where it's appropriate to do so. Now, I can well understand, I'll be absolutely honest, that there's a variety of reactions to that statement, so let me have a go at addressing that. Let me start with the point I made earlier about common law. It seems to me that one of the attractions of the UK system is that it can accommodate standards more easily. It can allow easier adaptation to changing markets and more effective use of judgment against a framework of statutory public interest objectives such as those that we have at the FCA. That, I think, is a big reason, as I said earlier, for the success of London as a financial market centre. But as I said a few minutes ago, we do run the risk, as we've seen in the past, that things can be done. There is a general problem, I think, of things get done with a rush of enthusiasm after a crisis, and then over time, they can be left to rest, as it were. The senior managers regime does create a discipline, creates that discipline of individual accountability and responsibility, and it applies across all the activities of firms. But we have to do something, as I said, to, in a sense, fill the gap outside the perimeter. So the principle we've laid out is that if a firm signs up to good standards, I would assume they would be signing up on the basis that they abide by them. So in a sense, allowing us to then use them to make judgments under the senior managers regime should not be a big issue. I can imagine, though, that one response to that comment is, well, what about the so-called E word, namely enforcement? Is the FCA then going to take enforcement cases under the senior managers regime using that route in, as it were, for outside the regulatory perimeter? And is that really what they were intended for? Probably with the added implicit comment of no. Now, I would hope that the sensible starting point here is, of course, that the link between the standards and the senior managers regime creates the right incentives to follow standards. So in that case, of course, enforcement isn't going to come onto the agenda. But if harm does emerge, it has to be judged. It has to be judged to result from failures of responsibilities of senior managers, and we do need a yardstick against which to make those judgments. So approached from that angle, it would seem odd not to use the standards that we have and the standards that we've adopted. So if I can conclude by putting all of that together, we are strong supporters of good standards, and we're strong supporters of what the FMSB is doing. Very much welcome its work. Delighted to see that today is such a success. We don't want to see a return to the old ways where standards and codes were adopted with enthusiasm and then, frankly, could gather dust. And I don't think that's going to happen. I think that we've got a much more robust regime now. The senior manager regime puts the spotlight on this issue, and that's why we've issued the consultation paper, to stimulate discussion with a view to solving this underlying issue of how can we best make those judgments outside the regulatory perimeter where the senior managers regime applies the test of responsibility. And we think that a sensible link between good standards and that judgment is the best framework to make those judgments on. But I also welcome the fact that we can now have that discussion. There will be many views in that discussion, I recognise that. And I look forward to that discussion. So thank you.
Thank you, Andrew. Very helpful. Maybe we could continue this thought that you've already started about the relationship between the senior managers regime and standards, because I've got a couple of questions here which are right on that point. So the first is, if the senior manager regime is a whole firm regime, isn't that simply going to motivate firms to move their unregulated activity into group companies that are outside the regulatory perimeter, thereby reducing regulatory oversight of those activities? So that's one question about the impact of SMR on how businesses are structured, which maybe you could hold in your mind for a moment. The second SMR question is directly on the question on the point of standards, and it's this: do you perceive a risk that if you say to firms who are contributing to the production of standards in unregulated markets, that you're going to use the SMR to hang enforcement action against those firms in the future if they don't abide by those standards? That there is a risk of an unintended consequence here, namely that those firms say, well, we don't really want to be the outsourcees for what would otherwise be FCA regulation, so we've decided we're not going to support this standard creating venture any longer, and through having that regulatory sword hanging over us, you end up actually undermining the work of standards creating bodies like FMSB. So you've probably forgotten the first question now, but I don't know if
I think it's about moving businesses. Actually, it's about what we would politely call arbitrage, but we'll call it moving businesses.
Okay.
So let's take the second question to start with, because it's a very important one, which is, and a good question, which is, would this effectively act to, if you like, stunt the use of standards, because they start to have a sort of a formal role, and there's a stick there, if you like, to use it for it. And I absolutely recognise this point. I think the challenge is this, and this is why I made the point about the flexibility, if you like, in the best sense of the term, of the legal framework and the common law framework that we have in this country. I think that it is sensible to envisage and to put into practice the use of standards in wholesale markets. I think it is a regime that works better, frankly, than a more formalised, detailed rulemaking regime. I think that's a good thing. So I think then we need to have, if you like, the mature discussion about, okay, but look, we have had to deal with some pretty difficult problems as a result of what happened in the past. So how do we achieve, I think, a sensible outcome which marries the benefits of standards from the point of view of governing conduct with the disincentives that come with, frankly, the degree of formalisation that our powers produce? Because history would tell us that we do need a combination of those two. That if you only leave it to us, we're pushed down the rulemaking world. That becomes, I think, somewhat inflexible. If you only have standards, history would tell us we do have that other issue. So to my mind, that's the sort of the issue that we need to sort of go through with, discuss and consider how we get the best out of this. This is why we've put the point on the table. And it is an issue in our world because it's a paradox of our world that some of the most difficult issues that we face are caused outside the perimeter. And you might say, well, we can say, well, sorry, nothing to do with us sort of thing. Parliament defined the perimeter. But it isn't that simple. It isn't that simple partly because actually the perimeter is quite well, I'll use a non-pejorative term, it's quite complicated in places. So, I'll give you an example of something like interest rate hedging products for small firms. Some of that's inside the perimeter, some of it's outside the perimeter, some of it's market activity outside, some of it's inside. It's quite a complicated world. So marrying those two up is not straightforward. So the reason we've put this proposal forward, and we've been able to do it now because of the encouragement we've taken from the work that you've done and the Global FX Code and other things in other sort of non-perimeter worlds, as I said, such as corporate lending standard codes, is that we do feel there's an opportunity here now to address this question. First question was on migration. Well, it's a perennial issue. I have to say that in a way, of course, the backstop is that if we saw this sort of thing happening, we would have to raise, but it would have to be obviously with government and with Parliament, the question of whether it was a perimeter issue in its own right, because effectively there was, in the nicest sense of the term, regulatory arbitrage going on. So we'd have to, if we saw a lot of that going on, we'd have to do it that way.
Okay. So there's a question here, another regulatory perimeter question, which is effectively about the fact that standards are not only helpful outside the regulatory perimeter, but in relation to regulated business within the perimeter as well. And should we be implying from your remarks that you're less interested in standards within the regulatory perimeter than you are outside, or do you have equal interest on both sides of the boundary?
Well, that's a really good question. So let me give you a sort of flavour of the discussions we had when we were thinking about the consultation paper on that point. We've started with outside the perimeter for two reasons. One is because in some ways it's the more pressing problem, but actually probably more so than that. Frankly, when we had the discussions with our lawyers, it is easier to make this work outside the perimeter in the sense that the landscape is cleaner, if you like, in the best sense of the term. Now, I agree with you that we should not therefore conclude there is no role for standards inside the perimeter, because that, I think, would be the wrong thing to do. And it would also be somewhat illogical, given the points I made about English law and so on, because you could well argue, well, surely the argument is just as good inside the perimeter in that sense as it is outside, and that would be true. What I think we have to, why we're biting off one piece first, is that it was pretty apparent to us from the early discussions we had that to make that link work inside the perimeter is going to require a lot more complicated thinking about how we would make the two regimes work together, because it is more complicated when you've got both rules and standards operating in the same space. So we'd like to come to that later. If we can make the outside the perimeter work, we'll come back and then think about inside the perimeter, but it is more complicated.
Okay. Can I ask you a question that we asked Mark earlier on, which is, given that you sit obviously in Europe on the ESMA board and IOSCO, you see whatever it is, 146 different countries' approaches to financial regulation. It's easy for us here in London to get excited about FMSB. What level of excitement or enthusiasm do you perceive in other jurisdictions for the approach to standards that we're taking and the kinds of arguments that you've been outlining just now? Are we a lone actor here, or is there broad consensus elsewhere that we're doing the right thing?
I don't think you're a lone actor in the sense that because obviously London markets are so important globally. Frankly, what you do has an impact and a resonance well beyond the sort of shores of the UK in that sense, and I think you know this from your work, but I can tell you that's the case. I still think, however, philosophically, which is so why I slightly probably laboured the common law point, that I think it has more resonance in regimes where it is easier to envisage standards fitting into the regime than those which are more rules-based in a detailed sense. I think that is philosophically something I do notice. So I think you'll probably come across that difference. But I would say, sort of taking that on board, I think there is a great deal of interest in what's been done here. And of course, alongside you, if you take something like the Global FX Code, which obviously has also been developed with a lot of work by central banks, that's another example where, of course, it only works if it's got broad international endorsement. And there is a lot of international interest in that, and that obviously also provides another example of how codes can work and standards can work, codes and standards. So there is international interest, but still a lot of work to be done on that front. But I think, bodies like IOSCO and to a degree ESMA provide obviously an opportunity to take that forward, certainly.
So we've got a question here. We spent quite a lot of time earlier in the afternoon talking about SONIA and LIBOR and some of the questions there. You might want to roam broader than just this question, which says, LIBOR transition was recently referred to, I think it was by Morgan Stanley, as bigger than Brexit. The question is, do you agree? You might, but as I say, you might want to roam more widely than just that.
Because actually, it's
simple thought.
Depends how you judge it. If you look at the pure numbers, although of course you've still got the problem of comparing apples and oranges. Of course, the numbers in terms of outstanding LIBOR contracts are huge. So, there's several times world GDP. So if you look at it from that point of view, you think, really? We're doing this, are we? But I would say you also have to obviously view it from the lens of the sort of the challenge and complexity of what we're doing. Now, LIBOR is, so I don't want to trivialise LIBOR because it should not be at all. It's a more, I think, a more contained issue in one sense in terms of the number of work streams and strands that we've got going with LIBOR than Brexit. And I would also say, in both cases, we want to narrow down the uncertainty we're facing. Probably further ahead with LIBOR than we are with Brexit at the moment on that one, I think. That might be, thank you for stating the blindingly obvious, you'll say at that point. But again, I don't want to trivialise the task with LIBOR, but I think I would look at it through those two lenses. I mean, some people have also said to me, well, actually quite reasonably, if you were viewing it from slightly abstract, so you're really seriously doing these two things at the same time? It says, this is really good planning, is it? And I said, well, of course you wouldn't in that sense, but our view with Brexit obviously is an external, externally given event. And with LIBOR, as I said in the speech I made in the summer, we've really reached the point where we felt that while we didn't, I have to keep saying this, we don't observe misconduct at the moment. We regard the system as too fragile in terms of the dependence on expert judgment, and the underlying point being is that we don't see a likelihood that a sufficiently sort of broad and deep market in money, particularly interbank money, will re-emerge to address that, and that's the issue.
Yeah. We've got another question here on the international scene, which is very similar to the one we talked about earlier with Mark, actually. And it's essentially this. We've been through a period after the crisis of regulatory convergence, and many people pushing in the same direction to great effect so far. Is it possible that we've now effectively passed a moment of peak regulatory convergence, and now actually the nationalistic tendency of regulators worrying about their own home turf more than they worry about the global consensus is going to make life a lot harder for everybody, not just regulators, but people trying to implement global standards as well?
Well, it's a very good question. Let me put it into a bit of perspective. First of all, I think that what has been achieved post-crisis, and obviously Mark, to his great credit, has led this in the FSB, has been huge achievement in terms of global standards. They're not obviously complete in the sense they don't go across the complete landscape of financial markets. But it is a huge achievement. And I was giving evidence in the House of Lords this morning, and I was being questioned about sort of, in a sense, regulation as a condition for open markets and free trade in financial services. And I said, it would have been very easy post the financial crisis to, in a sense, to resort to protectionism. If you think about something like the pullback in international bank lending that happened very suddenly, in the wake in the sort of thick of the financial crisis, that was a huge home preference shock in many ways, to use the sort of economics phrase. If you think about that and you think about the reactions to that, it would have been easy to move away from open markets, free trade. What I think actually has happened is that we haven't, Moreover, I think the work that Mark and the FSB have done in particular has laid the foundations for saying that actually we can have open markets, we can have free trade. Because if you think about the Brexit debate, I often hear people talking about WTO terms in trade. Well, that's great for goods trade. It isn't really there in financial services. What you do need is robust regulatory standards, and that work has done a huge job in laying foundations that we could put to use. So that's good. Now, are we about, as you rightly say, to see all that sort of go backwards? Well, I don't think so. I think what we are seeing, I would observe, and people ask me about the sort of relationship particularly with the US at the moment, and I say, look, I think I would judge by we have a lot of relationships with US regulators because there are a lot of US regulators, that bilateral international engagement and relationships are as strong as ever, and very strong. Our relationships are very strong in the wholesale markets with the SEC and the CFTC, and we have not seen any divergence in that respect. I think, to be honest with you, and I was a commentator, so I say no more than this, I think the US is going through one of its periods of suspicion and skepticism about multilateral institutions. I think that is a challenge looking forwards. And I think there is an issue, again, I said this in the House of Lords this morning, I think in a world where I think the UK in a post-Brexit world where we want open markets would benefit from having broader global standards with sort of depth of application. I think that is going to be challenging in a multilateral sense in the current world, but it is not a challenge in terms of bilateral relationships. And I hope it will not be a challenge, therefore, in terms of seeking to build maybe networks of those arrangements which can give us broad equivalent standards in the future. So that in that sense, I would be very positive that the relations are good.
I suppose a lot of people who ask the question that I just posed think not so much about the UK-US relationship, but UK versus Europe.
Yes.
With the location policy discussions about CCP fresh in their minds, and they ask it thinking ahead to Brexit and what might happen post-Brexit. Do you have a view on what should happen, is likely to happen to regulation here post-Brexit?
I've said a number of times this year, and I've reiterated, I'm a very strong believer in free trade and open markets. I think the best outcome for both the UK and the EU is to have open financial markets. I know it's easy to say that from a UK perspective when it's perceived that we enjoy comparative advantage, but I do firmly believe that it's in the interests of both sides. It isn't a given, of course it isn't a given, but I do think that a basis on which we can build continued open markets is the right one. Now, it's not going to be in a single market, that's clear. I think, if I'm honest with you, and again I said this morning, I think the UK can go down one of three routes, broadly speaking, I think. One, and these are sort of broad routes, they're not the detail. One, of course, is that we put priority on the relationship with the European Union and to maintaining open markets with the European Union, and that means close alignment of rules in the future. It wouldn't be the single market, but it would have to be something similar to that. And of course, on the plan with the withdrawal legislation is that on day one of Brexit, the UK will have, in essence, the same rule book as the EU. We're hard at work on that. And although we're having to address what we tend in the language to call the inoperables, those are very narrowly defined technical things that you have to change to make the European rules work in a UK national context. Now, if you do that, then you have to address what I call the rule taker issue, which is, I think, how does the UK operate in a world where it is going to, in principle at least, have less say over how those rules that it is signing up to are made. And there the issue would become one of, how do you construct an institutional arrangement when you're not in the single market that would take that forward? So that's the first route. I'll flip over to the other end and then come back to the middle. The other end is you saying, actually, we value global open markets. We value the ability to, follow global standards, and we don't seek to align precisely with the European Union, and we go our own way. That's the second one. I would hope and expect then that we would try to make use wherever we can of global standards, but they are a patchwork to build open markets. The one in the middle is in many ways is the ideal outcome, which is that we have a system, as I said earlier, of sort of, mutually recognised equivalence, but it's based more on what I might call sort of equivalent outcomes rather than equivalent detailed rules, which comes back to why I laboured the points about common law versus civil codes at the beginning. We do have a different tradition and approach in this country. But it is possible, in my view, to produce definable outcomes which are sufficiently equivalent to support free trade and open markets. That would, in my view, be the best system, not just for the UK, but more broadly. But let's be honest, it's going to be a hard task to move to that outcome, but. If you ask me what the best outcome would be, that would be my view.
We've got a little bit of time for maybe a couple more questions. So one interesting one here, somebody who was obviously alert in the earlier session with Mark and noted that...
It surprised me with what Carney said now, which I don't know what he said.
No, well, he said that the reason we need 7-year deferral for compensation is because that's the typical time period that it takes for malpractice and mischief to be uncovered in markets. So the question is, given that fact, would it be appropriate for regulators to be paid with a 7-year clawback too?
Well, I suppose
it's not an anonymous question, so I could pin.
No, it's a very reasonable question. I mean, first thing to say is that regulators do not get the sort of variable pay that people in the industry get on the whole, I have to say. So there's not that much money on the table. Let me be clear. I actually do have a deferred element to my remuneration. Actually, it's not deferred for that long. That was a choice of my board. You'd have to ask them the question about the time, but. Actually, you can look this up in the FCA's annual report, which is a ripping read, I should say, that a part of my variable remuneration is deferred.
Good, okay. I just wanted to lighten the mood of the discussion a bit. So let me ask you one final question, Andrew, because I know time is creeping, and that is, if you had one area of inquiry, piece of work, focus on standards production that you would like to see FMSB really motor on in 2018, what would you prefer us to spend our energy doing? Or maybe two, I don't know.
Well, it's slightly picking up a little. I only caught sort of snippets of the previous panel where we're standing outside, and I want to caveat that. So I think it's probably way too ambitious to expect to do this in 1 year. But I know there was quite a bit of talk about algos in the previous panel, which I did pick up when I was listening a little bit outside. And I do think there's an important issue there. Not about, some people say to me, how do the regulators, inspect the content of algos? Well, I mean, let's not get too ambitious there. But I think there is an important question about how firms govern the use of algos. So it's not so much what's in the black box, important though that is, by the way. It's about how you put them to use, how you can risk manage them and control them. And I think, there are clear, I think that's an area where, again, if you go down the route of trying to make rules in that area, that will be hard. I don't think it will be optimal because it's obviously a naturally evolving thing. But I do think thinking about standards for how you, in a sense, control and govern the use of them, because I have to say, without going into too much, some of the things we have seen in some of the more celebrated incidents that have happened where you think, well, how on earth did they use that algo in that situation? I think it's quite important. So I don't know, we have to sort of be cautious here because, it doesn't lend itself so easily to some of the things that standards do appeal to, but it's a very important issue, and it's only going to get bigger in a sense as to how we govern the use of algos and complicated trading strategies. So
Okay.
Encouraged thought in that area to see what could be.
That's very encouraging, because there are a number of people in this room who have contributed to the construction of a standard on algo governance, which is sitting on the runway, ready for.
Oh, there you go. You can't fault the FMSB for its promptness and timing. There you go. Lovely.
Andrew, thank you so much. I know you're running out of time. It's incredibly helpful to have your personal support for what we're doing, and your physically being able to be here today really as a symbol of that. We really appreciate it. Thank you so much.
Thanks so much.
Ladies and gentlemen, it falls to me to bring the proceedings in this event to a close. I won't keep you long, but in line with tradition, I'd just like to offer some thanks. Some thanks to the Governor, Mark Carney, for being with us, and Andrew, to all of the moderators and our panels, in particular Dave Ramsden, who's spent the entire afternoon with us, which is fantastic. To our friends and colleagues at Bloomberg who've hosted this event, absolutely superb. And I will mention two very important people from my team, Leslie Pizzulo and Hannah Matawa, who made this happen, which was great. I would mention that a lot of work goes on behind the scenes to make the FMSB work. And in that regard, if I may, just put on the record, as it were, the support that we received from the teams at the Bank of England, so Chris Salmon and Ed Ocampo in particular, and from the FCA, Edwin Skilling-Latta and Daniel Measle. Thank you very much for everything that you do for us, and our pro bono supporters. So from KPMG, Karim Haji's team, Roger Acton, who's done a lot of work on our behalf, and Matt Jarman, who spent a considerable amount of time getting the FMSB off the ground. Serge Gwynn and his teams at Oliver Wyman, who have provided fantastic support to us, and our legal advisor and the legal advisor to the board, Michael Kent, and his team at Linklaters, who spend so much time keeping us on true north and navigating some of those difficult debates that you've heard about happening in committees today. And finally, to the members, the degree of commitment and time and effort that the board members give is amazing. So we do really have those 200 senior people working at ground level to get the FMSB mission to where it needs to be. My final comment, given that it's been a long afternoon, probably one of the most important ones, is we'd be most happy if you could join us for drinks and receptions outside in reception. But thank you very much for your time and for your attention today. Thank you.